Hello everyone. So today we'll start with a new chapter, that is, or new unit I could say, that is unit 3, issue of debentures. So first of all, let's understand what does the debenture mean, and then we will see how to pass the journal entries for a issue of debenture and while the debentures are redeemed. So in this chapter, see, only they might ask you the journal entries based on the issue of debentures, but I am going to teach you the entries for redemption also, so that you people will understand the logic behind all the entries that you pass for issue. Clear? Okay, so let's start. So first of all, what does a debenture mean? What does a debenture mean? So debenture is a loan taken by the company from the public or the lenders, backed only by the company's credit worthiness, not necessarily by specific assets. So what do you mean by credit worthiness? First of all, that if a company has taken a loan, by how much time the company can repay the loan, or will the company repay the loan or not? Will it default on the loan? Will it not repay the loan? That is what is called as credit worthiness. So Vijay Mallya, for example, Vijay Mallya had credit worthiness before because the people assumed, whoever have given him the money, assumed that he will pay the money back. But today, if Vijay Mallya asks for a loan, what do people say? People won't give him the loan. Why? Because he has ran away from India. So people know that if we give them the loan, he will not repay the money back. So that means he has lost his what? He has lost his credit worthiness. Clear? Okay. So now, what do you mean by debenture? See, there are two things. There is debenture, and there is also shares, be it preferential or a equity share. So what is the difference between these both? See, basically, whenever a person purchases a share in the company, whenever a person purchases shares of the company, he will become the owner of the company. He becomes the owner of the company. Whereas, if a person purchases any debentures of the company, in that case, it's like he has given the loan to the company. He won't be owner of the company. Owners don't give loan. Owners give what? Capital. So that's why debenture is not taken to my share capital. But whereas it is taken as what? It is taken as long term borrowings in the balance sheet. Clear? Because whatever debentures you issue today will be the loan taken by the company. Loan taken by the company. So debenture is a loan taken by the company from the public or the lenders. It can be from the public, or sometimes it can be from the banks also. So what does company do? Sometimes takes a loan from the company. So instead of giving any asset as security, what does company do? They will issue them debentures. So we have the concept below that. So we'll discuss it thoroughly while dealing with that. So backed by only the company's credit worthiness. So how much credit worthiness the company has? See, there are some rating agencies. Okay, we have something called as CRISIL. CRISIL, okay, it is a credit rating agency which rates each of the debentures issued by the company. AAA plus. So there are so many ratings. Depending on the ratings, people will come to know, will the company repay the money back? See, one more difference between the shares and debentures is, whatever shares the company issues, when will the money be repaid? Once, if the company buys back, or whenever the company goes for dissolution. What do you mean by dissolution? The company shuts down. So in that case only the money will be repaid to the shareholders. But in case of debenture holders, company will generally always issue redeemable debentures. What do you mean by redeemable debentures? That means once the company issues the debentures, after so many years the company has to buy back the debentures or redeem them or take back the money, give back the money to the people with a premium or on a discount. Depends on case to case basis. So, but the company has to pay back the money. Company cannot keep the money till the date of dissolution. Clear? So this is one more difference between the debentures and the shareholders. So, then what are the main features? It is a debt instrument. As I told you, it represents money borrowed by the company. Share capital is not borrowed by the company. It is a capital given by the owners of the company in return of what? In return of profits or dividends of the company. Dividends are the share of profit, right? Okay. But in case of dividend, what do we pay? We pay something which is fixed, that is interest on the debentures. So company pays fixed rate of interest, usually at a regular interval. So yearly basis or a half yearly basis or a quarterly basis or a monthly basis. Depends on debenture based to debentures. So company pays what? Interest. So for loan, what does the company pay? Whenever I take a loan from the bank, what will company pay to the banks? It will pay interest similar to the loan taken by the company. In case of debentures also, company pays what? Fixed interest. So the debenture name will be 9% debenture account, 10% debenture account, and so on. So this 9%, 10% becomes really important to you people. Clear? Okay. Then, no ownership. As I told you, debenture holders are lenders. They are the lenders. They are the loan givers, not the owners of the company, unlike shareholders. So they are not the owners, but they are the lenders of the company who are giving loan to the company on a short term or a long term basis. Then, repayment. Principal amount is repaid after a fixed period. That is we call as maturity of the bonds. Maturity of the debentures. or are converted to equity. So now one more option that the debenture holders have is they can convert the debentures into equity. After so many years, debenture holders will be given an option in the beginning itself. Whenever the company issues a debentures, the company will give them the option. If you want, you can be paid through money. We will repay the debentures through money, or you can convert these debentures to equity shares. If some people access the option, they will be changed to equity whenever the time comes up. And if some people are not opting for the conversion, in that case, they will be repaid with the cash or whatever the bank account is. Clear? Okay. May or may not be secured. So some debentures are backed by asset, others rely on the company's promise to pay. So what happens is, some people, once the debentures are issued, some people might not have that much trust on the company. So what company does? They will back these assets by some collateral. Now what do you mean by collateral? Let us say if the company defaults on the payment of these debentures, these people can come and sell off the asset which is kept as collateral. Let us say, I issue debentures. I say that it is backed by company's building. So if tomorrow company do not pay off the debenture holders on maturity time, let's say after 10 years, what can debenture holders do? They can come up and catch hold of the building. They can sell the building, and whatever the money they get from the building, they can distribute it among themselves as a repayment for the debentures. So this is what's called as secured debentures. But whereas non-secured or unsecured debenture means basically they are based on what? On a company's promise. Only word of mouth of the company. Company ಇವತ್ತು ಹೇಳುತ್ತೆ ಪೇ ಮಾಡ್ತೀವಿ ಅನ್ಕೊಂಡು ಪೇ ಮಾಡ್ತಾರೆ ಅಷ್ಟೇ, ಮತ್ತೆ ಏನು ಸೆಕ್ಯೂರಿಟಿ ಇಲ್ಲ. ಕ್ಲಿಯರ್? ಓಕೆ. Then it is tradable. So whenever a debenture is issued, they can be bought and sold in the market openly. Debentures can be bought and sold in the market openly. Then we have priority in repayment. Debenture holders are paid before the shareholders in case of liquidation. So let us say tomorrow the company dissolves or goes to liquidation, right? Let us say the company had promised 10 years of maturity period, but within 5 years of issue, the company goes to liquidation now. So what does the company do? They will pay the debenture holders on first priority. The priority goes like debenture holders. Then we have preference shareholders next, and then at the last comes the equity shareholders. So this is the priority. The debenture holders will be given the first priority, then the priority goes to preference shareholders, and then the priority goes to the last priority goes to the equity shareholders. Clear? Okay. Then no voting rights. Again, if I have to compare this with the equity shares, they cannot participate in the company's management decision. So because they are the loan givers or the lenders of the company, they do not have any right in the making the decisions for the management. See, whenever a management or the board of directors wants to come up with some decision, they might go to the shareholders. Because why? Because they are the owners of the company. Shareholders are the owners of the company who will make decisions by voting towards the or in favor or against the decision taken by the board of directors. But the same right is not available with whom? With the debenture holders. Clear? Okay. Then going towards the accounting entries for issue of redeemable debentures. So there are around 6 different cases in which we might have to pay we might have to pass the journal entries. So now let's do one thing. Let's understand all of this with the help of journal entries. So, but before that, just remember. See, I had told you before that equity shares cannot be issued at a discount. Remember, equity shares cannot be issued at a discount. But in this case, in case of debentures, see, in case of equity, Section 53 used to restrict the issue of equity shares on a discount basis. I can issue the equity at par. I can issue the equity at premium, but not at discount, right? But in case of debentures, I can issue them at a discount also. I can issue them at a discount, at a par, or at premium. While coming to the redemption, again, I can redeem them at par, at discount, or at premium also. That's the complete thing remains with the company. All the decisions will remain with the company during how much to pay, should the company pay, or how much should the company receive. Clear? Okay. Let's start. So first case. So what if the debentures are issued at par but redeemed at par? So now whatever entry used to pass in the equity share, same entries will be passed over here. So whenever the debentures are issued, what entry do you pass? So the entry will be first of all we receive the money. So bank account will be debited. Clear? Then to what? To debenture or whatever the debenture percentage is, 9%, 10% debentures, application account debited. Then again debenture application account debited to what? Not to share capital, to 9% or 10%, whatever the question asks you, percent debentures account. Here this will be categorized as what? As a liability. And whenever my liability increases, we will we will do what? We will credit the account. The same thing I have done over here. And this logic I have told you before in the issue of equity also. The same logic applies here too. So first of all, we receive the application money for the debentures, and then this money is transferred to what? To debenture application account, which is a kind of a liability account. Yes. Then this has been cancelled by passing it to what? To 9% debentures, which again will be a liability categorized under what? Long term borrowings. Long term borrowings. Clear? Okay. Then again, next comes the allotment step. Again, the entry will be what? Debenture allotment account debited to debenture account or 9% debenture account. Debenture account. Then again, the entry will be what? Bank account debited to debenture allotment account. Same entry. Whatever we used to pass in the equity shares, same entries will be passed over here. But here you have one more option. Remember this. Let us say the question, do not talk anything about application allotment. It says debentures are issued for rupees 10 each. That's it. So what to do? I can skip the entries. How? I will tell you now. See, okay. First of all, before going to the shortcut entry or the compound entry, see, these entries are for what? Are for issue of debentures. For issue of debentures. But we also have entry for what? Redemption. So what do we do during the redemption? What happens during the redemption? We pay off the money for the debentures. See, people have paid me the money for purchasing the debentures. Now in redemption, what happens? Whatever debentures people have, I will buy it back and pay them the money. So that in that case, what happens? Whenever I pay them the money, so to bank account, because I am paying them the money. And the debentures whatever I had in my books of accounts, will be no more valid. Once I purchase them back, that means I will cancel the debentures. Whenever I cancel the debentures, debenture was a what? Was a liability. And whenever the liability is cancelled, the value of liability decreases, so debit the account. So 9% debentures account. Debentures account. Debited. Done. Done. The redemption entry. This entry is for what? Redemption. Clear? Okay. Next. Okay. Now have a look at it. So from now onwards, I will pass only the shortcut entries. So I won't be again passing the entries under this account. Just a minute. I won't be passing the entries again under debentures application, debenture allotment. I won't do it. I will straight away pass a single entry, bank account debited to debentures account. Why? Because I can cancel off this by this. See, once the account is credited, once the account is debited, that means I can cancel off this account with this account. So the entry will be what? Bank account debited to 9% debentures account. That's it. That's it what I'm doing over here. I'm just cancelling off the application entry and just cancelling off the allotment entry. So the entry will be bank account debited to debentures account. That's it. Clear? Okay. Let's see. So debentures are issued at a discount and redeemable at par or at discount. Let's see. Let's look at the question. 1000 rupees debentures of rupees 100 each issued at 10% discount and redeemed at case number 1 at par, case number 2 at discount of 5%. Let us see. So first of all, in case of issue, so let us just write it down. Okay, what is the rate at issued at? Rupees what? 100 rupees was the face value, but at a discount of 10%. So the amount will be 100 minus 10%. That is 90 rupees. Right? Then redemption. It is redeemed at what? First of all, par. That means at rupees 100. Then in case number 2, it is redeemed. It is redeemed at what? 5% discount. So that will be rupees 95. Rupees 95. Then okay, let's pass the entry. So whenever debenture is issued, whenever the debentures are issued to the public, in that case, what the entry will be? I will receive the money in bank account. People will pay the money for the debentures. So bank account debited to what? To debentures increases. The value of debentures in my books of accounts increases. So to just a minute. To debentures account. Now comes how much money is received. How much money is received in the bank account. How much is the value of per debenture that I issued at rupees 90? So the amount will be rupees 90 into 1000 debentures were issued. Right? So how much will that be? Rupees 90,000. Rupees 90,000. Yes. Okay. Now what to do? Next. How much is the face value of debenture? See, when I have told you this in the share capital also, at discount or at premium, whatever you issue, whatever liability head you create over here, that is debenture account or share capital account, it should always be at what? It should always be at nominal value. It should always be at nominal value. So what is the nominal value of debenture over here? Rupees 100 into 1000 debentures. So how much will that be? Rupees 1 lakh. Rupees 1 lakh. Done. Okay. But now there's a difference between debit and credit over here. Where will the difference go? This will go to what? My expense account. Why? Because if you see, the debentures are issued at 90,000 rupees. But what was the actual value of debentures? Rupees 1 lakh. Rupees 1 lakh was the actual value of debentures, but I'm issuing it at what? At a discount of 90,000 rupees. That means 10,000 rupees is what? It's a discount given to the people. That means they are getting something of value of rupees 1 lakh at rupees 90,000. That means company is incurring a expense of 10,000. Right? So that means whenever my expense increases, I will debit the account or credit the account, I will debit the account. So the entry will be discount on issue of debentures. Debenture account debit. How much will that be? Rupees 10 was the discount given. Yes, rupees 10 was the discount given on 1000 debentures. That will be rupees 10,000, and 90,000 plus 10,000 will be equals to rupees 1 lakh. That is the entry. Yes, this is the entry you pass for issue of debentures. Clear? Okay. Next. So first of all, let us understand what do you do with this account. It has to be transferred somewhere, because we have seen that, right? In preferences, you will come to know what to do with this. But now let us understand what do we do with this particular thing. See, let us assume the debentures are issued for 10 years, right? Now, whatever discount I have incurred over here, whatever discount I have incurred over here, this discount is belonging to the issue of debentures which were issued for 10 years. Now, what do I do with this discount? This discount will be transferred to P&L account, not at once. Whole of rupees 10,000 should not be transferred to the P&L account at once. Why? Because I am issuing a liability or a capital natured receipt I am getting for 10 years. So because of that, I will divide this 10,000 by 10. I will divide this by 10. So how will I do that? So the entry will be for the transfer. See, discount account has been debited. So now I need to reverse it off. I have to take the whole of 10,000. From the whole of 10,000, I will take small amount. By 10 different parts, I will transfer to P&L account. So whenever I transfer some amount from this 10,000 to the P&L account, the value of this will reduce. And whenever this reduces, it was debited before. Now to reduce this, what should I do? I will credit the account. So to discount on issue of debentures account. Debit what? Debit P&L account. Debited. Now how much is the value? Rupees 10,000 divided by 10 years. How much will that be? Rupees 1,000 for each year. So each year I will pass this particular entry to transfer small chunks of this discount to my P&L account. Clear? Okay. Next, redemption. Now how will you redeem? So whenever I redeem at what? In case number 1, it is redeemed at par. It means 100 rupees I am paying. So this debenture account, whatever was created, will be written off from the books of account. Why? Because this debenture is no more required. This liability account, whatever I have created, is no more required. Why? I am paying it off after 10 years. So I will reverse this whole of rupees 1 lakh. So debenture account debited. To what? Payment is done through what? Bank account. So to bank account. How much will I pay? Rupees 100 per debenture into 1,000 debenture. So how much will that be? 1 lakh, right? 1 lakh. 1 lakh. Now how much was the debenture listed at in the books of accounts? Debenture account was opened for rupees 1 lakh. Credit. I am debiting it now to cancel it off. Right? So for how much? Again, rupees 1 lakh. Done. This is the redemption entry. This is what my redemption entry. Clear? Okay. Now, redeemed at rupees 95. What to do with this? Redeemed at rupees 95. So all the entries till this stage remains the same. Till this stage the entries remain the same. There won't be any changes. Remember. But in case of redemption, what happens when you are redeeming at rupees 95? So first of all, I need to cancel what? The debenture account, right? I need to cancel the debenture account. So debenture account was opened at what? Rupees 1 lakh rupees credit. So I will debit the debenture account. Debenture account debited by rupees how much? By rupees 1 lakh. Then to bank account. To bank account. How much am I paying through bank account? How much am I paying through bank account? Rupees 95. Rupees 95 into 1000. That is how much? 95,000. Now what has happened? There's a gap over here. Debit, credit. There's a gap, right? How will I fill this gap? How will I fill this gap? See, now tell me, I had taken a debenture worth rupees 1 lakh rupees from the people, right? I have taken the debenture worth rupees 1 lakh rupees from the people. But while paying it off, I am paying 95,000 rupees. I have taken debentures worth rupees 1 lakh rupees, but I am paying how much? 95,000 rupees. So am I at a profit or loss? I am at a profit. So whenever profit increases in the books of accounts, I will debit the account or credit the account. I will credit the account. So the entry will be to profit on redemption of debentures account. Rupees how much? 5,000. That is rupees 5 into 1000. Clear? Okay. See, in your textbook, they have not given any entries for the redemption. So I am teaching you this entries only for the purpose of understanding. Clear? So in examination, they might not even ask these entries. But please understand these entries because somewhere tomorrow it might be necessary. Clear? Okay. Now, okay. See, here I had told you that whatever account you create should be divided between the term of debentures, the maturity period of debentures, right? So on this, we have a some small questions. Look at the question. Illustration number 11. HDC Limited issued 1 lakh debentures, 12% debentures of rupees 100 each at rupees 94 on January 2022. Okay, fine. Under the terms of issue, the debentures are redeemable at the end of 5 years from the date of issue. Calculate the amount of discount to be written off in the each of the 5 years. So first of all, pass the entry. First of all, pass the journal entry. So bank account debited because I am receiving the money. Debentures are issued at what? Rupees 94. I will just mark this or highlight this. Issued at 94 rupees, right? Okay. This is at what? At discount. That means we are incurring a profit or loss. We are incurring a loss over here because debentures worth rupees 1 lakh. I am taking how much? Only 94 rupees. Debenture worth rupees 100. I am taking how much? Only 94 rupees. 6 rupees I am letting go. Don't pay me. Right? It is a loss to me. So account debited. So it's a loss. So it's an expense. So discount on issue of debenture. Issue of debenture account. Account debited. Right? Expenses are debited to what? To how much? 12% debentures. As per the question, 12% debenture account. It is a liability, and whenever the liability increases, I will credit the account. Okay, now coming to the amounts. How much did I receive? Rupees 94 into 1 lakh. How much will that be? 94 lakhs. Then how much is the discount? Rupees 6 into 1 lakh. How much is this? Rupees 6 lakh. Then debenture value. Actually, the value was rupees 100 per debenture into 100 1 lakh debentures. How much will this be? 100 lakhs. Now comes the question. What do I do with this particular part? What do I do with this particular part? See, whatever 6 lakh rupees is there, it has been incurred. It has been incurred as an expense for how many years? For 5 years. Because the debentures are redeemable after 5 years. After 5 years, I have to pay them the money back. Right? So, because of that, this has to be divided between all the 5 years. See, why do we charge depreciation? Because depreciation is charged on an asset which will be used for a 10 years or 5 years period. So, because of that, I will divide the value of depreciation in all the years. Right? I have told you logic in the depreciation chapter. Similarly, these debentures have been issued for 5 years. So, because of that, I will not book the expense and transfer to P&L the whole amount of rupees 6 lakh. But this 6 lakh rupees I will divide by what? Divide by 5 years. Clear? Now, let's see how to do it. So, year 1, that is 2022, 2023. We are following what? Calendar year over here, remember? 2024, 2025, 2026. 5 years. 1, 2, 3, 1, 2, 5. Yeah, 5. So, each year, how much should I divide? 6 lakh into 1 by 5. For 5 years, so 6 lakh by 5 will be how much? Rupees 1.2 lakh. So, each year I will transfer how much? Rupees 1.2 lakhs. Each year the same entry will be passed for 1.2 lakhs in the books of accounts. The entry will be what? P&L account debited. P&L account debited to discount on issue of debentures. Rupees how much? 1.2 lakhs or 1 lakh 20,000. This is the entry I pass in the each year's financials while closing the books of account. The same entry what I passed over here. Remember, the same entry what I passed and taught you the logic also for the same. Because it is debited over here, I need to reduce the value each year, right? Of this rupees, 6 lakh rupees, I will take out 1.2, 1.2, 1.2 each year. So the value over here we will go on reducing. So since it is debited, I need to credit it to reduce the value now. I will reverse the entry. Done. Simple. Okay. Going ahead. So illustration number 12. HDC Limited issued 2 lakh debentures, 12% debentures of rupees 10 each at rupees 9.4. Again, the debentures are issued at what? Discount. On 1st of January 2022. Under the terms of issue, 1/5 of the debentures are annually redeemed by drawings. The first redemption is occurring on 31st of December 2022. See, the debentures were issued on 2022 January. The first redemption is done on what? 31st of December 2022. Calculate the amount of discount to be written off from 2022 till 2026. So now what is happening over here? I am not redeeming the debentures at once. But each year, out of 2 lakh debentures, 1/5 of the debentures are being redeemed. So that means out of 2 lakh, how much is 1/5? 1 by 5 will be how much? 2 lakh by 5 will be 40,000. So that means 40,000 debentures are being redeemed each year. Each year I am paying off how much? Towards 40,000 debentures. Clear? So after 5th year end, it will be 0. So that means what I need to do is, I will find out the percentage to be written off based on the value of debentures, the closing balance of debentures at the year end before redemption. So what I will do is, so write down the years. 23, 24, 25 and 26. 5 years. Now, closing balance of debenture before redemption. So for first year 2022, how much is the closing balance before redemption? Before redemption on this date, what is the balance of debentures? So 2 lakh debentures into rupees 10 each, right? Rupees 10 each. So how much will that be? Rupees 20 lakhs. What is the discount on debentures? 9.4. 10 minus 9.4 will be 0.6 into 2 lakh. Into 2 lakh debentures equals to how much? 2 lakh into 0.6 equals to rupees 1,20,000. So 1,20,000 is what? My discount charge. That is my expense to be distributed for all the 5 years. Okay. Now after this, the next year what happens? Out of 2 lakh debentures, on this date, December 31st, on 31st, I redeemed 40,000 debentures. So how many debentures remain? So 2 lakh minus 40,000. 1 lakh 60 debenture remains into rupees 10 per debenture. So that will be rupees 16 lakh. Then again, after 16 lakh, again for 40,000 debentures are redeemed in 2023. How much will that be? The next year balance before redemption, that will be rupees 12 lakh. Then 8 lakh. And lastly, before 2026, before redemption, the balance will be 4 lakh debentures, and after 31st December 2026, the balance will be 0. Done. Now, wait a minute. Now what to do? Now I need to divide this 1,20,000 rupees between all these years, right? But in each year, the balance is going on reducing. So that means I cannot divide it equally. Just like our old question, I cannot divide it equally between all the years. Why? Because the weightage is being varied over here, right? The weightage is being varied. So what I will do, I will give weightages. Weightage, how much? Let's start with 1 over here. 1, 2, 3, 4 and 5. Right? What is the total over here? 5 plus 4 plus 3 plus 2 plus 1 equals to 15. Now what I will do is, discount to be written off. How much will that be? How much is the value of discount? That is 1 lakh 20. So 1 lakh 20,000 into 5 by 15 by 5 by 15. How much will that be? 1 lakh 20,000 into 5 by 15 equals to 40,000 rupees 40,000. Then the next year 1 lakh 20,000 into 4 by 15 equals to how much? 20 into 4 by 15 equals to 32,000. So on. Go on doing it. 3 by 15 into 2 by 15. This remains the same. 1 lakh 20 is the base amount by 1 by 15. Simple ratios. That's it. So 1 lakh 20,000 divided by 15 equals to into 3 equals 24,000. Then 2 equals 16,000. 1 equals 8,000. Now add all of this. How much will that be? 40 plus 32 plus 24 plus 16 plus 8. That is 120. That means 1.2 lakh amount has been received. Got it? So I have divided 1 lakh 20,000 rupees in this proportion in each of the calendar years. So what is the entry you pass? P&L account debited, 2 discount on debentures 40,000. Next year 32,000. So and so on. Clear? This is how you pass the entries and you figure out the amounts to be divided. See, this method is done only when the debentures are redeemed in installments, right? The debentures are redeemed in installment basis. This you do whenever the debentures are redeemed at once. At once I am paying off all the debentures, right? Clear. Next. Debentures issued at premium, redeemable at par or discount. So here what is happening? I have issued debentures at a premium, but I am redeeming it at par or discount. So let's look at the question and understand the entry. 1,000 debentures of rupees 100 each are issued at 110, that is premium of rupees 10 per debenture, redeemable at par, case number 1, case number 2 at a discount of 5%. So first of all, I have issued it at what? Rupees 110, right? First case, redeemed at what? Par, that is rupees 100 is the par amount, remember. Then case number 2, redeemed at rupees 5% discount, right? So that means 100 minus 5% will be 95 rupees. Okay. Now pass the entry first of all. So we are issuing it at premium of rupees 10, right? So what comes up? Whenever I say premium, securities premium. Remember, securities premium. So the entry will be bank account debited. I am receiving the money. So bank account debited to how much? Whatever the percentage of debentures. Okay. How much do I receive in the bank account? Rupees 110 into 1,000 debentures, right? How much will that be? 110 into 1,000 equals to rupees 1,10,000. And how much is the value of debentures? What is the nominal value of debentures? Rupees 1 lakh. Why? Because rupees 100 into 1,000 debentures. How much will that be? Rupees 1 lakh. Then to what? The remaining amount. Securities premium. Remember, securities premium will be a part of share capital. So because of that, it is a capital item. Because of that, whenever capital item increases, we will credit the account. Securities premium account. How much? How much is the premium? 10 rupees per debenture. So into 1,000 debentures. How much will that be? Rupees 10,000. Then yes. Next. The same thing. Whatever you do in the equity share, same entry I have passed over here. Right? I have passed the shortcut entry over here. You can pass bank account debited to debenture application account, then debenture application account debited to debenture account to securities premium account. That also you can do if you want to. Clear? Okay. Because in the textbooks also they have given you the shortcut entries also. Just have a look at it. Now comes to the redemption. Redeemed at rupees 100. So now whatever debenture I have over here will be redeemed. Right? Redeemed at what? At par, rupees 100. That means how much am I paying over here? 100 into 1,000 debentures. Rupees 100 into 1,000 debentures. So payment is done through bank account. So to bank account. How much? Rupees 100 into 1,000 debentures. How much will that be? Rupees 1 lakh. Then debit what? Debenture account. Whatever account was created is no more required because I am paying the money. I am paying off the money. So because of that, I don't need the money. So debenture account will be debited. Debenture account debited. How much is the money paid? Rupees 100 again. Rupees 100 into 1000 debentures. How much will that be? Rupees 1 lakh. Done. Done. So this is how entry you pass for redeemed at par. But now comes the question: what happens when you redeem at a discount? So this premium will go where? To my equity share capital, right? In shareholders fund, I have share capital, and below that I have reserves and surplus. In that reserves and surplus, I will show this as a securities premium of rupees 10,000. Clear? Okay. Now I am again discounting. So that means debenture worth rupees 100. How much am I paying for that? Rupees 95. That means I am earning a profit over here. So the entry will be again debenture account debited, because the liability will reduce. So I am debiting the debenture account for rupees how much? 100 per debenture into 1000 debentures. So it will be rupees 1 lakh. To bank account. How much? Rupees 95 is being paid. Remember, rupees 95 into 1000 debentures. How much will that be? 95,000. Okay. Now there's a difference. Now there's a gap over here by in debit and credit. How will I fulfill this? How will I fulfill? Profit on redemption of debentures. Right? So profit increases, so credit. So profit on redemption of debentures. How much? 5,000. That is rupees 5, whatever discount is given, rupees 5 into 1000 debentures. Okay. And one more thing, this profit, whatever profit you have, will not be transferred to P&L account. This profit on redemption of debentures, whatever you have, will not be transferred to your P&L account, but it will be transferred to something called as to capital reserve. Remember forfeiture of equity shares. Same way, debit what? Profit on redemption of debentures. But debit. So much? Rupees 5,000. This is the entry you pass for redeeming the debentures at a profit. So whatever profits you have, please don't transfer it to the P&L account. Transfer it to what? Capital reserve. Clear? Okay. Then going ahead. Debentures are issued at par, but redeemable at premium. Now I want everybody's attention over it, because this is the part where you might be getting confused. Okay, look at over here. So 1000 debentures of rupees 100 each are issued at par. That means 100 rupees I am receiving. So the debentures are issued at what? Rupees 100. Now redeemable at a 5% premium. That means I am redeeming them at a 5% premium. So redeem at what? 5% premium. How much will that be? 100 into 5%. That is 5 rupees. That is 105 rupees. So understand this. Remember prudence concept. So what does prudence concept say? We should anticipate all the losses, but should not book or anticipate any profit. Right? Whatever losses are being done in the future should be booked today itself, because I know that it will be a loss tomorrow. But in case of profits, when will I take it into my books of accounts? Only when I am earning that profit, right? Now, coming to this case, see. While issuing the debentures, I tell them that it will be redeemed at 5% premium. I have openly told them that it will be redeemed at 5% premium. That means I know that debenture worth rupees 100 will be redeemed at 105 rupees. That means I am paying 5 rupees more. I am paying 5 rupees more for the debentures. In that case, I know that I am paying 5 rupees more. That means it will be an expense to me in the future. It will be a capital expense for me in the future, right? So because of that, I will pass the entry today itself. While I issue the debenture, I will pass the entry today itself in the books of accounts. How will I pass the entry? Have a look at this. First of all, bank account debited. How much? How much do I receive? Rupees 100 per share, per debenture into 1000 debentures. How much will that be? Rupees 1 lakh. Done. Then to what? To debentures account. Whatever the percentage of debenture, it might be depending on the question. So debenture account. How much is the debenture value? Rupees 100 into 1000. How much is that? Rupees 1 lakh. Now for tomorrow's redemption, I will open a capital expense account. Capital expense, or I can say the liability account. Right? So that account will be called as premium on redemption of debentures account. Debentures account. How much is the value over here? Rupees 5. That is the premium on redemption. Premium on redemption. That is tomorrow. How much ever redemption I am making, that I am booking today itself. Today only in the books of accounts I am mentioning it. See, for the case of profit, I know that there will be a profit tomorrow, right? In case of profit, I know that tomorrow that there will be a profit. But did I pass the entry during the issue of debentures? Did I pass the entry during the issue of debentures? No. Why? Because it's a profit. Let the profit happen in the future. That time I will pass the entry. But in case of a loss, I will book the loss today itself. Right? So because of that, I am opening this account over here. I will tell you what to do. Don't worry, don't get confused. So how much will this be? Rupees 5,000. No. There's a mismatch. Debit 1 lakh. Let's credit 1 lakh 5,000 rupees. No, what will I do? See, I have told you that there will be a loss. Right? So whenever there's a loss, should I debit the account or credit the account? So, but you have credited the account over here. This is a liability account I am creating over here. This is the liability for the future. This account, whatever I am creating over here, is a liability account for the future redemption. That means once I redeem it, I will cancel off this account. How will I do that? I will tell you. Wait for now. First of all, let's pass the expense account. So whenever there's an expense increases, so debit or credit? Debit the account. So the account will be loss on issue of debenture. Account debited. How much? Again, rupees 5 into 1,000. How much will that be? Rupees 5,000. So my debit and credit is matching over here. Yes. So that means see, this account whatever I created is a expense account. It's a expense account. Where will this go? This will again be taken to my P&L account by dividing it between the years. Same like your discount on debentures whatever we have done over here. Remember this part. The same thing will be done over here also. Clear? For the loss on debenture, loss on issue of debenture. Now next, this account whatever I have created, that is the premium on redemption of debenture. This is my liability account. That means it is a liability taken to what? Taken to my balance sheet. Clear? Okay. Now let's see the redemption entry. After looking at the redemption entry, you will get clarity on all the things. See, where will this go? This will go to my P&L account. That means it is not carried forward. And I am transferring small amounts to my P&L account. So it will be cleared off by the date of redemption comes up. Right? But where will this be taken to? This will be taken to where? To my balance sheet. Why? Because it's a liability. It is a liability. That means I need to clear it off. So whenever I am redeeming the debentures, I am paying off the money for the debentures. Should I maintain this account in my books of accounts again? No. So I will cancel off this account. How will I cancel off these both accounts? By debiting it. Because these were liability accounts. To cancel a liability, I will debit the account. So the entry will be debenture account debited. How much? Rupees 100 into 1,000 debentures. Nominal value. Remember, nominal value we should take always 1 lakh. Then we have premium on redemption of debentures, right? How much? 5,000 rupees. Premium on redemption of debentures account debited. How much? Rupees 5 into 1,000 debentures, that is 5,000 rupees. Right? I am debiting the liability account. Why? Because liability account when it's debited, it will be cleared off. To what? To payment, to bank account. How much will I pay? Rupees 105 into 1,000 debentures. So how much will that be? 1,000 into 105 equals to 1,05,000 is the payment done. Is my debit and credit matching? Yes, sir. So got it. So whatever account I create over here is only for the purpose of this future redemption. Clear? Okay. Going ahead. See, in your textbooks they have given you only this entry. But once you pass this entry, you won't be able to understand what to do with this account. So I have told you, I'm showing you all the redemption entries also, so as to understand what will happen in the future with this account. Clear? So because of that, I am teaching you all the redemption entries. So but for examination purpose, this is not required. Clear? Fine. Then debentures issued at discount. Today I am issuing a discount, but tomorrow I am redeeming it at par. Now again I want your attention. Look at the question over here. 1,000 debentures are issued at 10% discount of rupees 100 each, was issued at a discount of of a 10% discount. So how much is the issue price at? Issue will be 100 rupees minus 10%, that is rupees 90. Then redeemable at a 5% premium. How much will the premium be? So redeemed at rupees what? Rupees 5% premium. So 100 into 5% will be 105 rupees. 105 rupees. Okay, fine. Now let's first of all issue the debenture. So bank account debited. How much do I receive in the bank account? Rupees 90 into 1000 debentures. How much will that be? Rupees 90,000. Okay, next. 2. Debenture account. 2. Debenture account. How much will this be? Rupees 100 into 1000 debenture. Nominal value, remember? Rupees 1 lakh. Next. See, while issuing the debenture, it is issued at what? It is issued at discount. That means I am receiving how much? Only 90 rupees for a debenture worth rupees 100. That means I am making a loss over here. I am making a loss. So whenever discount comes up on the debenture, it is an expense, and whenever expense increases, debit the account. So discount on issue of debenture, on issue of debenture account debit. Rupees, how much? How much is the discount given? 90 minus 100, rupees 10 into 1000. How much will that be? Rupees 10,000. My entry is matching over here. My entry is matching 1 lakh, 1 lakh. But we are forgetting one more thing. See, redemption is done at what? Rupees 105. That means I am paying 105 rupees for a debenture worth rupees 100. For a debenture worth rupees 100, I am paying how much? 105 rupees. 5 rupees extra I am paying over here. That means it's a expense to me. Remember the previous entry, what we have passed? Premium. So what I will do is, I will again create a liability account over here. So see, I know that in the future I have to pay more. I have to pay more. Pay more than 100 rupees. Right? So because for that I will create a liability today itself. I will create liability today itself. Why? Prudence. So premium on redemption of debenture. How much? Rupees 5 into 100, 1000 debentures. How much will that be? 5000 rupees. Yes, 5000 rupees. Now again it's a mismatch. If you see 1 lakh rupees, 1 lakh 5000, right? But I have told you before, we need to create a liability, we need to create an expense head also. Remember this entry. See, we have created an expense head, we have created a liability. Why? Because we were redeeming at premium tomorrow, in the future. So here also again you need to create a expense account. So what the expense account will be? Loss on issue or redemption, whatever it can be. So issue of debentures. Debenture account debited by rupees what? Rupees 5 into 1000. That is 5000 rupees. So now my debit is matching with my credit. Clear? So what will I do with these two accounts? With these two accounts, I will transfer amount to P&L account year by year, divided by number of years of maturity. I will transfer amounts to P&L account. What will I do with this account? What kind of account is this? This is a liability account. This is a liability account. That means I will transfer it to, or I will reverse this whenever the redemption is done. So now come to the redemption entry. This will be transferred to my P&L account. This and this will be transferred to what? To the balance sheet. Remember? Okay. Now this will also be transferred to. This will also be transferred to the P&L account. Okay. Because these both are expenses. These both are expenses. These both are expenses, and these both are liability in nature. So now redemption entry. Redeemed at what value? Rupees 105. So to bank account. How much? Rupees 105 into 1000 debentures. How much will that be? Rupees 1,05,000. Then how much was the value of debentures issued? How much was the value of debentures issued? Rupees 1 lakh. I need to reverse it. Whenever I am redeeming it, whenever I am paying back, my liability reduces. Whenever liability reduces, debit the account. So debenture account debited. How much? Rupees 100 nominal value into 1000. That is rupees 1 lakh. Now that's the difference. That's the difference in debit and credit. How will I patch this up? Remember this liability account which was created. Now use this account over there. I will reverse the premium on redemption or issue of debentures. Issue of debenture. How much? Rupees 5 into 1000. How much will that be? Rupees 5000. Now my debit and credit are matching over here. Done? Clear? So this is how we pass the entry. So, and one more thing you remember, see, while the debentures are issued at premium, when the debentures are issued at premium, what I will do? I will create securities premium account when it is during the issue. But if the redemption, while redeeming it, I am paying a premium, I will open an account called as premium on redemption. Please do not open securities premium account over here. Please do not open securities premium account over here. Please do not. Clear? Okay. And one more thing. Okay. So whatever heads I have passed over here, you can club these heads. You can club these heads. How do I club this? I can pass an entry like this. Bank account debit to debenture account to premium on debenture. Over here I can write loss or discount on issue of debenture. Amounts, coming to my amounts, rupees 90,000 over here, then debenture account rupees 1 lakh, then premium on redemption will be 5,000 rupees. And coming to this discount part, what I can do is I can club these both amounts. I can club these both amounts and write 15,000 rupees over here. Why? Because at the end of the day, this will go to where? This will go to my P&L account on year basis. Small part will be divided between all the maturity period. Clear? Okay. Next, the last part maybe. It's the last part. Issued at premium, redeemable at premium. Wow. So 1000 debentures are of rupees 100 each, issued at rupees 110, premium of rupees 10 per debenture, and redeemable at 5%. Now what to do over here? What to do? So let's see. So issue is done at what? Rupees 110 as per the question, right? Then redeem at rupees 105. First of all, pass the entry for issue. So we have issued at what? Premium. So what comes up? Do I pass the entry to securities premium or premium on redemption? Securities premium, because during the issue, if I have a premium, it will be passed through what? Securities premium. But if it is during the redemption, it will be passed through what? Premium on redemption account. But in this case, there is both premium on issue and redemption. Let's see what to do. So first of all, bank account debited. How much? Rupees 110 into 1000 debentures. How much will that be? 110 into 1000. 1,10,000? Yes. 1,10,000 rupees. Then 2 debentures account. How much? At nominal value. Rupees 100 into 1000. How much will that be? Rupees 1 lakh. Then we have premium. During the issue, we have premium of what? Rupees 10, right? So, to securities premium account, rupees 10 into 1000 debentures. How much will that be? 10,000 rupees. Are we done? My debit is matching with my credit. So, are we done? No, sir, not yet. Why? Because during the redemption, we are redeeming at what? At this premium, right? Because of that, there will be an expense or a loss in the future. Days. Since I have a premium over here during the redemption, what do? I will create a liability today itself, right? So for that, what is the entry that I pass over here? To premium on redemption of debentures account. How much? Rupees 5 is the premium into 1000. That is 5,000. Then I am also incurring a loss over there. So because for that loss on redemption or issue of debenture account debit. How much? Rupees 5 into 1000. That is 5,000. Then okay. Now this is the expense account will be transferred to what? To the P&L account, and this too will be transferred to what? To my liability. Now let's pass the entry for redemption. At rupees what? At rupees 105. So first of all, to bank account, because I am paying the money for the redemption, rupees 105 into 1000. How much will that be? Rupees 1,05,000. Then after this, debenture account is debited. To reverse it off, to reverse the liability, debenture account debited. How much? Rupees 100 nominal value into rupees 1000. How much will that be? Rupees 1 lakh. At the end, what? This is the liability account that I have created. Yes, I need to clear it off now. So now how to clear an entry which is in the credit? By debiting it. Premium on redemption account debited. Rupees 5 was the premium because it is redeemed at what? Rupees 105. So 5 rupees premium. Rupees 105. So 5 rupees premium into 1000 debentures. That will be how much? 5000. So and we are done with the redemption entry also. Clear? So these are all the cases. See, I have not solved any illustration from your textbooks. Instead of that, I have taken my own question over here and solved all of them. So basically, if you go to the questions, the same entries will apply. So what you can do is, depending on case to case basis, see, only they will ask you the issue part. Only the issue part will be asked to you. Redemption part won't be asked in your examinations also. In your textbook also, there are no questions on the journal entry for redemption. So please keep it in mind. Go to the question, look at each case. Refer the video once again, and let's look at the question. And go on solving it. That's it. Okay. One change can be, they will pass the allotment or application account. That you know how to pass through the old chapters. Clear? Done. Next. Look at one question over here. One question I will solve you for you people. Illustration number 7. X Limited issued 1 lakh 12% debentures of rupees 100 each at a discount of 10% payable in full on application 31st of May. Applications were issued for 1 lakh 20,000 debentures. That means we have issued the debentures for 1 lakh debentures, but we have issued application for how many? 1 lakh 20. That means it's an over subscription. Debentures were allotted on 9th of June 2022. Access money was refunded on the same date. That means on 9th of June we have refunded what? The access money. To bank account entry. Remember? Okay. Pass the necessary journal entry. Show the necessary ledger account. See, whenever the question talks about application and allotment, please open up the debenture application and debenture allotment account. But the question says debentures were issued for rupees 100. Done. Do not open anything. Just pass the compound entry. What is the compound entry? This is the compound entry I am talking about. Clear? Okay. Now let's pass the entries. So in this case, what is happening? For 100 rupees each share, debenture, I am receiving the application, the money on fully on what? On application itself. So there is no separate allotment over here. Clear? So please do not pass any entry for allotment separately. Whole of the money, that is how much? 100 minus 10%, that is 90 rupees is completely received on what? On the application itself, because fully on application, right? So pass the entry now. So bank account debited to debenture application account. I am passing the entries as per your textbooks. Application account. How much have I received? Rupees. How much? 100 minus 10% equals to how much? Rupees 90. So 90 into how many debentures were issued? So 1 lakh debentures were issued. How much will that be? 90 lakhs. But the application has been received for how many debentures? The application has been received for 1 lakh 20,000 debentures. So how much money I will receive? Not 90 lakhs. Not 90 lakhs. How much? On 1 lakh 20,000 debentures. How much will that be? Rupees 1 lakh 20,000 into 90 rupees. That is 10 lakhs. Sorry, 1 crore 80. So I will just write it in lakhs. Okay. So it is 108 lakhs. 108 lakhs. Okay. Now what has happened? Whatever debentures were there, they were allotted on 9th of June. So this is on 31st of May. 31st of May. Then on 9th of June, I have made the allotments. And I have refunded the remaining money. I have refunded the money on the same date. So what I can do is, first of all, reverse this whole account. See, I have told you, whatever application, allotment or first call, final call account we open, we need to reverse it off, right? We should not keep it open. So I will reverse it off. Debenture application account debited by how much? Rupees 108 lakhs. Then to debenture account. How many percentage debenture? What is the percentage of debentures? 12%. So 12% debentures account. How much? Rupees 100 into 1 lakh is a nominal value, right? We need application for only for rupees 1 lakh, for 1 lakh debentures. So how much will that be? 100 lakhs. Yes, okay. But there's a discount also. Remember, we have issued a discount. 10 rupees is a discount given to the debenture holder. So it will be a loss for us or an expense. So it will be an expense. So debit the account. Discount on issue of debenture. Regarding the redemption, they have given us nothing over here. So we'll assume it is redeemed at par. It is redeemed at par. So do not open any premium on redemption account. Okay, how much? Rupees 10 into 1 lakh. How much will that be? 10 lakhs. Done? Okay. But what has happened over here? What has happened over here? We are refunding some money. We are refunding some money. On how many applications? On 20,000 applications we are refunding the money. So what the entry will be? 2. Bank account. I am paying off the money which is received extra. How much? Rupees. How much is received extra? Rupees 90. Rupees 90 on application of how many applications? Of 20,000 debentures. How much will that be? 20,000 into 90 equals to rupees 18 lakh. Rupees 18 lakh. So 108 plus 10 lakh will be how much? Rupees 1 lakh. Sorry, 118 lakhs, and over here rupees 118 lakhs. Done? Yes. So this is how you pass the entries. Done? Okay. Next. The next topic we have is issue of debentures as a collateral security. That means, let us say today I will take a loan of rupees 1 lakh. Clear? This is a loan taken, not debentures issued. This is a loan taken from the bank. This is a loan taken from a bank. Now, on this loan, bank needs a security. Why? Because what if tomorrow I don't pay off the loan? Right? What if I tomorrow don't repay the loan? In that case, bank needs some security. So instead of security, what do? I tell them that I will issue you 10,000 debentures of rupees 10 each. For whatever the loan amount is there, I will issue you some debentures. Let us say 15,000 debentures. Why? Because interest has to be covered, right? Interest also has to be covered. So I will issue you 15,000 debentures of rupees 10 each, worth rupees 1.5 lakhs. Example. But when will this debenture be issued? Only when I default on the loan. Only when I default on the loan. But if I do not default, should I issue these debentures? No. So look at the theory. No entry is made in the books of accounts of the company at the time of making the issue of such debentures. So whenever I say to the bank that I will issue you the debentures, no entry needs to be passed. No entry. Why? Because I am not issuing debentures at the same point when I take the loan. When will I issue debentures? Whenever during the repayment time, let's say after 5 years I have to pay back the loan. I say I don't have the money. So in that case I have to issue the debentures now. So till that date, till 5 years I will not issue any debentures. But I need to tell it to the people that I might issue debentures. So, in the notes to accounts of the balance sheet, the fact of debentures being issued and outstanding is shown in the note under the liability security. See here, over there. In the notes to accounts, in the long-term borrowings, in secured loans, I have IDBI bank's loan of rupees 1 crore. So for this, I have issued debentures. I have not issued. I have told them that I will issue you debentures as a collateral. So collateral is secured by issue of 1 crore 50 lakh rupees worth of debentures, that is 14% mortgage debentures I am issuing. So for a loan, I can just say that it has been collateral secured by the issue of debentures and no separate entry needs to be passed. When will the entry for debenture be passed? Whenever I am actually issuing the debentures because I am not repaying the loan. I don't have enough money to repay the loan. In that case only, I will issue these debentures and it will be shown as what? Long term borrowings. Term borrowings. Clear? Till that date, no entry needs to be passed. Clear? Okay. Let's look at some questions now. So, issue of debentures in consideration other than for cash. So, in these cases, okay, there are 3 different cases. The first case talks about the issue of debentures through cash. Right? I am issuing debentures, I am receiving cash. Done. Case number 2. I am buying a fixed asset, but instead of paying them in cash, what do? I give them debentures. Clear? And in the third case, I am taking a loan and saying them that I might issue you a collateral security as a debenture if I don't repay the loan. Clear? So let's see. Let's look at the question. Illustration number 10. X company limited issued 10,000 debentures, 14% debentures of the nominal value 50 lakh rupees as follows. Okay. So nominal value of debentures issued is how much? Rupees 50 lakhs. How is this issued? To sundry persons for cash at 90% of the nominal value. That is 25 lakhs. So that means 90% of nominal value. How much is 25 lakhs into 90%? 25 lakhs into 90%. That is 22 lakh 50,000. What is the remaining amount? Remaining amount is what? Remaining is discount. Discount given on the issue of debentures. Then to vendor for purchase of fixed asset worth rupees 10 lakhs, I am issuing debentures of how much? Of nominal value 12 lakh 50,000 rupees. That means again I am issuing the debentures at a discount over there. To a banker as a collateral security for the loan rupees 10 lakhs at a nominal value of 12.5 lakhs. In this case, there is no debenture issued, but I am telling them that I will give you a collateral security. So what to do? Let's see case by case. So first case, where it is issued for cash. So the entry will be bank account debited to debenture account. To debenture account, how much? Rupees 22 lakh 50,000, because they have given here clearly that it is issued for a nominal value of 90% only. But what is the nominal value of debenture? What is the nominal value of debenture? Rupees 25 lakhs. There's a difference. There is a difference. What do I do with this difference? I will transfer it to what? To discount on debenture issue, right? It is an expense, so expense increases, debit the account. Discount on issue of debenture account debited. How much is the discount given? Minus 25 lakhs equals to 2 lakh 50,000. It is 10% of 25 lakhs. Where will this go? This go to my P&L account on year-on-year basis. Then, so first entry is done. Next, going on to the second entry. That is issue of debentures of nominal value 12.5 lakhs for a fixed asset worth rupees 10 lakhs. So for a fixed asset worth rupees 10 lakh, I am giving them a debenture worth rupees 12.5 lakhs. That means I am giving them a more of value. That means here again I am issuing a debenture at a discount. Let's see. First of all, pass the entry for issue for purchase of fixed asset. Purchase of fixed asset. What is the entry? Whenever I purchase a fixed asset, that means my value of fixed asset increases. Whenever asset value increases, I will debit the account. So fixed assets account debited. Asset account debited to what? To lender's account or to vendor's account. Who is the vendor? The person who is selling me the asset. Who is selling me the asset? What is the value of asset? Rupees 10 lakhs. So now, whenever I issue them the debentures, what's the entry that I pass? See, this vendor account is a liability account, so my liability is increasing because I'm not paying him cash. I'm not paying him cash, so my vendor's account liability has increased. Now I need to clear off this liability. Why? Because I'm issuing them the debentures. So whenever I issue them the debentures, the vendor should not ask me the money again. So vendor's account will be debited. Whenever I issue them the debentures, vendor's account will be debited. By what? Rupees 10 lakhs. What is the worth of debentures that I am issuing over here as per the question? What is the nominal value? Rupees 12.5 lakhs is the nominal value of debentures issued, right? What is the rate of debentures? 14% debentures, right? So just make this 14%, okay, here also. Make this 14% debenture, okay. So I am issuing a debenture worth rupees 14% debentures at rupees what? 12.5 lakhs. There's a difference between debit and credit. Why? Because it's a discount element over here. Because there is a discount element over here, right? So when your discount increases, discount on issue of debenture account debit. How much is discount? 2.5 lakh is the discount given on the issue of debentures for the vendor, right? So here what am I doing? I am buying a fixed asset, not for cash, not for bank account, but towards debentures. I am giving them the debentures, buying the fixed asset. Clear? This is what is called as issue of debentures in consideration other than cash. So instead of cash, what am I receiving? I am receiving a fixed asset. Done. So see, loan. So now what has happened? To the banker as a collateral security for a loan of rupees 10 lakhs, I am issuing a debenture with a nominal value of rupees 12.5 lakhs. So because of that, first of all pass the entry for loan. So whenever I receive a loan, so bank account will debited. Bank account debited To what? To loan. Loan is a liability. So to bank loan. When your liability increases, we will credit the account. So rupees, how much is the loan taken for? Rupees 10 lakhs. So 10 lakh worth of loan I have taken. Okay. Now do I pass any entry for the debenture issue? No, because debentures are not issued. When will it be issued? Whenever I default on the loan in the future. Whenever I don't pay off the loan on time in the future, only then I will issue debentures. So now don't pass any entry. So just write a note saying that debentures are not issued because these are not issued but given as a collateral security. So a note in the notes to the balance sheet is enough, like this. In notes to accounts, if I mention this part, it's more than enough. Why is this being mentioned over here? So as the people who are looking at the financial statement should know that I might issue debentures tomorrow. I might issue debentures tomorrow to the bank if I don't pay off this loan. Clear? Okay. Next. Interest on debentures, the last topic in your issue of debentures chapter. That is the issue of interest on debentures. See, what happens is, whenever I issue debentures, you see this percentage over here. What does that percentage mean? It is the rate of interest on these debentures. See, I have told you that the debenture, whatever I issue, is a kind of a loan taken from the public. Is a loan taken, and whenever I take a loan, what will I repay as the benefit to them? It will be the interest, yearly interest I will pay them. Yearly, half yearly, whatever it can be, okay, depending on case to case basis. So I will pay the interest, but how much the percentage of interest? This is the percentage of interest I will pay on the loan, on the debentures. Now look at the question. A company issued 12% debentures of the face value rupees 10 lakh at 10% discount, okay, on 1/1/2022. Debenture interest after deducting the TDS is 10% was payable on 30th June and 31st of December. That means half yearly. 6th month and 12th month I am paying what? The interest on debentures every year. All the debentures were redeemed after the expiry of 5-year period at a premium of 5%. Now before going ahead, let us understand what do you mean by tax deducted at source. What do you mean by TDS, tax deducted at source? TDS is basically that means that whenever someone is paying any income to a second person, while paying, let us say I am supposed to pay 10,000 interest. I am supposed to pay 10,000 interest. But Income Tax Act says that while paying the amount of 10,000, please hold back some amount as TDS. Please hold back some amount as tax. So I will make two bifurcation. 10% will be held back as what? TDS, and remaining 90% will be paid. So how much is 10% will be? Rupees 1,000, and 90,000 will be, 9,000 rupees will be paid. So where will this 1,000 rupees be paid to? See, while paying 10,000, I will keep 1,000 with me, pay 9,000. But what about rupees 1,000? What will I do with that? Can I keep it? No. I will pay this amount. I will pay this amount to whom? To Income Tax Department. I will pay this amount to Income Tax Department, saying that I have paid 9,000 rupees. I was supposed to pay an income of 10,000 rupees to XYZ person. Against his PAN account number, I will mention that he was supposed to receive 10,000. But I did not pay 10,000. I have paid rupees 9,000, and 1,000 I have held back as TDS. See, it is the income of this person only. But I will pay to Income Tax Department. Tomorrow, if he wants that money, he has to go to Income Tax Department, file his income tax returns, and get it as a refund. If there is no tax payable. See, don't worry. TDS provisions will be taught to you in the intermediate stages once you clear your foundation. So for now, I am just giving you a small hunch of what does TDS mean. Okay? So that means I am holding back some money. I will not pay this money to the person. I will not pay this money to the person. But I will pay only rupees 9,000 rupees. Now where is this necessary? I will tell you. Look at the journal entries. I will tell you what to do. Don't worry. So first of all, 12% debentures are issued for face value of rupees 10 lakh at 10% debenture discount on 1st of January. So on 1st of January 2022, I am issuing debentures. So bank account debited at what amount? 10 lakh minus 10%, that is 9 lakh rupees. At 9 lakh rupees to what? 12% debenture. 12% debenture. But these debentures are what? Redeemable at what? Redeemable at 5% premium. That means I have issued them at how much? Rupees 9 lakh. 9 lakh. These are redeemed at what? 105 lakhs. 15 lakhs. 10 lakh, right? So 10 lakh plus 5% premium will be plus 5% premium will be 105. Yes, 105 lakhs. 105 lakhs. So these are issued at what? So that means I am redeeming that them at 5 lakh more, right? 50,000 rupees. Sorry, 50,000 rupees more. I am redeeming it. That means there's an element of premium or expense in the future. So what do I do? So first of all, it is issued at a nominal value of 10 lakh rupees. Yes, but there is an element of premium also. Premium on what? Redemption of debenture account. Remember the journal entry? How much? 50,000 rupees is the what? Premium over here. Next, see, today I have issued the debentures at rupees 9 lakh. What was the worth of debentures? 10 lakh rupees. That means there is an element of discount on debentures, which is the expense. So, discount on issue of debentures account debit. How much is the discount given? Rupees 1 lakh. Rupees 1 lakh is the discount given today on the issue. But tomorrow, how much is the expense? When I am redeeming it, how much is the expense that I am incurring over here? How much is the expense that I am incurring over here? Of rupees 50,000. Of rupees 50,000, right? So the entry will be loss on issue of debentures. Loss on issue of debenture account debit. The same thing has been taught in the journal entry. I won't be repeating it once again. Go to the case where it is issued at a discount and redeemed at premium. So please refer to this particular topic. You will come to know how to pass the entry. I won't be repeating it in detail again. So if you want, you can club this also. You can club this as what? As loss or discount on debenture. You can write this entry as loss or discount on issue of debenture. Issue of debenture by adding these both amounts. Rupees 1 lakh plus 50,000. So 1 lakh 50,000. This also you can do if you want to. Okay. This is the first entry that we pass. Next. Now let's pass the next entry on what? 30th of June. So on 30th of June, on 30th of June 2022, what is happening? I am paying the interest, right? So debenture interest account debited. Why is this account debited over here? Because interest, whatever interest I am paying, it is an expense for me. It is the expense, and whenever expense increases, we will debit the account. How much is the debenture interest? See, even though the debentures have been issued for rupees 9 lakh, it is discount. Always compute the interest on the nominal value or the face value of the debentures. Please do not compute it on the issued value. Wrong. Your answer will be completely wrong. Remember this. Clear? So the interest will be on 10 lakh rupees. So 10 lakh into what is the rate of debentures? 12%. But the interest is being paid what? Twice the year, right? Twice in the year. So that means I am paying now only for 6 months. I am paying it only for 6 months. That is from January till June. Jan, Feb, March, April, May, June. So, right? So by 12. Sorry. So the interest will be 10 lakh into 12% into 6 by 12. That is 60,000 rupees is the interest payable. But now, out of this interest, some amount will transfer to what? To TDS payable account. Why is it payable? Because it is payable to whom? Is the TDS amount my money? While paying 60,000, I won't pay full 60,000. 10,000 I will keep with me, pay him only 90%, right? So this 90% after payment, whatever 10% I have in my hand will be payable to whom? To the income tax department. Right? Because of that, it will be my liability. Until I pay it to the income tax department, it will be my what? It will be my liability. So that liability account I am opening by what? Passing it to the credit. Because liability increases, we will credit the account. So to TDS payable. How much? 10%. That is 6,000. 10% of what? 10% of what? Total interest payable. Done? Okay. Then the remaining amount, sir. The remaining amount will be transferred to debenture holders account as rupees what? As rupees 54,000. As rupees 54,000 rupees. Right? So again, the debenture holders account is what? Is a liability. Account over here. Done? Okay. Next. On the same date, payment entry. I have to clear off these liabilities, right? I have to clear off these liabilities, right? How will I clear off these liabilities? By debiting it. So debit both the accounts. Debenture on the same date. Debenture holders account debit. TDS payable account debit. To what? How will I pay this? How will I pay this? To bank account. To bank account. Amounts. Debenture holder 54,000 I will pay. 6,000 I will pay to whom? To income tax department. So total amount of payable will be how much? Through bank account? Rupees 60,000 rupees. Clear? Okay. Next, the entry will be on 30th of December. Sorry, 31st of December 2022. Again the same entry. Debenture interest account debited to what? To debenture holders account, to TDS payable account. How much? Again 60,000 rupees. Why? Because again I am paying the interest on 10,000 rupees at the rate of 12% for half year, from July till December. July, August, September, October, November, December. So 54,000 towards this, 6,000 TDS. Why TDS 6,000? It is 10% of the income payable to the debenture holder. That is 60,000 rupees into 10% is equals to 6,000 rupees. Then again on the same date I will do what? I will pay off the amount. So debenture holders account debited. Holders account debited to TDS payable account debited. Reversing off both the liability accounts. Payable account debited to bank account. So 54,000 towards debenture holders, 6,000 to the income tax department. So total payment through bank will be rupees 60,000. Okay. After this, one more thing is pending to be done. See, whatever this account is there has to be transferred to what? To the liability account, right? This account has to be transferred to what? To the P&L account. How will I transfer this? By dividing it between all the years, right? So now how much? The expiry is what? 5 years. So that means whatever 1,50,000 rupees I have should be divided between 5 years. So how much will that be? 1,50,000 divided by 5 equals to 30,000 rupees each year. So what is the entry? On 31st December 2022, P&L account debited. Previously I have shown you the entry. Remember, go back to the same part and have a look. To discount or loss on issue of debenture. How much will that be? Rupees 1,50,000 divided by 5 years. How much will that be? Rupees 30,000. Okay. And one more interest remaining. See, whatever debenture interest I have passed over here is an expense account. Yes, here and here there are two debenture interest account passed for 60 plus 60. This has to be transferred to P&L account again. So transfer entry. Remember, sole proprietorship, final accounts, transfer entry. What is the transfer entry? P&L account debited to debenture interest account. How much? Rupees 1,20,000. Why 1,20,000 rupees, sir? 60,000 on June month, 60,000 in December month. So total interest paid during the year is rupees 1,20,000. I am transferring this entry to the credit. Why? Because I have debited the accounts over here. When I am transferring it, the accounts will be credited and debit what? P&L account. So in the P&L account, on the debit side, we will have the entry for debenture interest, which is the expense paid by me. Right? So we are done with the questions on issue of debentures and whatever the interest is payable. So go through the book. There are some silly questions in the textbooks. Go through all the illustrations. See whatever the illustrations still. I think illustration number 7 have been taken care in this theory part itself. Right? I have taken my own example cases over here. See, in these cases I have taken all of my own questions and solved them. So please go through them once again. Okay. Thank you.